This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless A Trading Frank. It's approximately 9:17 p.m. on Sunday, August 4th, 2019. Session will be recorded, uploaded to the Google YouTube channel for later viewing by all other members and free trial subscribers and anyone out there with the internet connection. Do spread the word around, as I always keep on requesting. We do get other people from different places checking in and using the Clueless A Trading Google YouTube channel as a very resourceful site to understand what is really happening with the markets, not just the random stuff that one hears from the uh, financial news networks. On that note, let us begin. Full disclosure, this is purely for financial education and not for any solicitation or advice. So, first of all, the daily machinations of the market and the intense volatility that we encountered last week uh, is all available for review on the real-time Twitter feed. So I'm not going to go through a blow-by-blow analysis of what happened last week. That's all on the real-time Twitter feed with comments, with visual tactical charts, alerts, all kinds of good stuff. What we're going to talk about tonight, and try to keep this brief, is what we expect to happen over this coming week. And we have to basically at this point keep our trading time frames on a tight leash. As I mentioned on my previous webinars, that we would, as we went into the Fed meeting, as I said that prior to the Fed meeting, if you all remember, that we need to reduce our long positions, take profits quicker, and not just live on hopium and all kinds of stuff. Last week was dramatically volatile. The Dow Jones fell almost 900 plus points in 1 week. I believe it was the worst week in 2019, and it happened rather quickly. One was the Fed sell-off, Federal Reserve sell-off. We talked about it in the last webinar. Next was the tweet, the sudden tweet, which was a shocker to the whole market. Market lost almost $1 trillion, I think less than $1 trillion or so within a matter of 48 hours. That's quite a bit. I'm not sure if that number is exactly right, but it was large. And that was the tweet from President Trump regarding slapping 10% tariffs on the remainder of the $300 billion worth of Chinese goods, because he wasn't happy with the way negotiations went when Secretary Mnuchin and Secretary of State Mnuchin and the trade negotiator Lighthouser were out in Beijing. We had a continuation of that on Friday, and then we had a reversal pattern that was starting to shape up, and now we have futures here down roughly 9. Nothing really odd about that. We are going to look at that on a technical basis and be prepared for whatever might come in front of us, this week, because that's what we do here as purely technical, tactical traders and non-emotional traders. It is obviously when we have these type of sudden volatile events, such as the tweet, such as the Federal Reserve sell-off and such, even though they cut rates and really didn't say anything wrong, the fact is one must react fast. One does not need to panic. You have to keep your positions moderate to small. You need to take profits on the reflex bounces that come. You need to go short on the SPY puts or the VIX calls, which were up about 300% plus on the original ones that I had proposed as an insurance policy before the Fed. As you know, they went from 90 cents to almost $5 or slightly above $5, and we sold along the way. They went to actually 5.50. These were the original ones that I had proposed, suggested on which were the August 7th 13 calls. Then we moved into the August 7th 19 calls, which also generated about 40 to 50% in net profits. So those hedges are very important in times like this. Of course, the charts will dictate whether or not we are in a a large correction, or whether this is just a tactical correction. From what I can see from the charts, as we're going to go through over the next couple of minutes, this is one of those garden variety pullbacks where levels are marked, and we need to basically be aware of that. Anything changes, we have to certainly react to that. There's no question about it. Saying all that, we are still in the middle of earnings season, and keep in mind, we have a slew of earnings, and we have played these earnings baskets very well. We have had some very large winners. We have had a couple of losers, but net, I calculated it out. We have had net, we were up very nicely if one looked at the whole basket approach. I do realize that it is not possible for many traders to buy even one call of all the ones that are proposed, but that's something I can't control. I can only suggest the basket approach, the basket strategy on some selective earnings trades, and of course, if you hit it, you make out like a bandit. And we saw quite a few of that. We also saw earnings reversals on companies like CONE, which I talked about in the last webinar, which basically collapsed to 5, 10, 15, 20 cents, and then went on Friday, went all the way up to almost $3+. I mean, those are just absolutely mind-boggling, but we have seen those things happen quite often. Volatility is intense. The VIX has been rising. I've been showing the VIX very methodically every single day, and the VIX is elevated right now. It hit 20, as I had shown on my charts, on the VIX charts, which are available on the this is the futures chart, as you all know by now. This is the live action happening in the markets. Futures are now down 12, almost 13 points. You can see that in the form of this red candle right there. This is where we closed at 4 p.m. on Friday. This is where we are right now. And we will try to guesstimate through these technical charts where we might go, both on the short term and the intermediate term. Saying all that, the VIX has to be watched. My chart showed a major resistance level at the 1950 to 20 level. We did hit that precisely, and then we had sharp red candle sell-offs, which started at 2 p.m. on Friday, which triggered a sharp reversal bounce on the front end of the market. The Dow Jones Industrial Average, the S&P 500, ramped up quite nicely. Still ended the day, if I remember correctly, down about 100 points or so. This after hours action that we're seeing right now with futures down about 13, you're seeing that develop here, is what we are going to look at. And this is something that's obviously coming. This is the fallout from overseas Asian markets, which are falling as they open, and the initial sell-off. Let's see if it gets bought or not. In the meantime, this is what's going on here in the United States as we speak on the Globex markets, and let's take a look at that. All right. So first of all, by the way, this week is all about earnings and central banks in Asia, from Philippines to India, and all those places, very important countries from a global standpoint. Those countries their central banks are looking to cut rates as they move along. So that's where the action's going to be. And this blowback that we're seeing here with futures down about 15 points, there could be some news and stuff, but I haven't detected it yet. It will show up on one of my monitors or on one of my iPhones. Could be some China comment or something that's pushing the futures down about 14 points right now. But keep in mind that it's all about earnings, tweets, U.S.-China trade war stuff, and of course, the Fed has already done what they did, and of course, the bets are still being put in place whether or not they'll do another rate cut in the month of September, which I believe they will. So that's pretty much the long and short of the story. On that note, let's get into the technicals. What we're seeing here is within a matter, this was last week. We had a very sharp reversal. You see that candle right there, very sharp reversal. That was looking really nice till we got that very sudden dramatic tweet out of President Trump regarding the 10% tariff on the $300 billion worth of US goods. Hi, Mike. Welcome. So that was this inverted hammer. Once we had that inverted hammer, we lost the 34-day moving average. I explained all that on the Thursday webinar. And then we lost the support level here, this red line, which was around 29.55. I told people to stay short. They made money, and then this is where we are right now. Now, this was Friday. Look at this interesting technical formation. Friday, we had a reversal hammer, even though it was mostly on the sell side. You can see that red candle, and that closed right above, slightly above, a point or two above the, or 3 or 4 points above the 50-day moving average. The 50-day moving average is key. The 34-day moving average has been lost. The first loss was the 20-day moving average. Then this is the yellow line is the 5-day moving average, which is obviously the fast momentum indicator for fast traders. We lost the 20, we lost the 34, even though we were well above that till we got the tweet attack on the $300 billion worth of tariffs. 10% tariff on the 300 billion things, which took the market by massive surprise. Then we fell on Friday and we closed above the 50, and this is where we are right now. So from a technical standpoint, this is pretty much standard procedure. We need to basically fall, and that failure must be contained at some very critical levels. So one of the first critical levels is this red line here, which is approximately 29.10. Now, I talked about this before pretty extensively on, and showed it too on my investing.com charts, and explained that also on Thursday. So the 29.10, which is roughly 7 points or 8 points lower than where we are right now as we speak, we might get that overnight or at the market open. That means futures would be down by roughly 25 handles, which would shock the hell out of people who are just price followers and not technical traders. All we would do is we would be retesting this extremely important support level, which I had drawn a while ago, and that would be the 29.10 level. Now, once we get to 29.10, does it just stop there? No, I think there's going to be a fallback to test the 2900. What is the most critical support, in my opinion, is this uptrend channel all the way from, I believe this is a weekly uptrend channel. Let me see. Nope, it's a daily uptrend channel. 1 second. And that uptrend channel is, these are very important for us to know. So we know where we react, where we need to get the heck out of Dodge, or where we need to basically add. And that uptrend channel comes in play at around 2,900 on the E-minis, on the futures, okay? At roughly 2,900. If we look on the S&P 500, the actual index, then this uptrend channel, let me draw this. I don't have it drawn here. From the lows of the dramatic Christmas Eve massacre lows, we have an uptrend channel. If I draw that and touch the June 3rd sell-off, which was the last time the markets really sold off, extend this, change the color to, let's say, blue, make it a little bit more visible. That comes into play at 2884. So the uptrend channel on the S&P 500, technically speaking, comes into play at 2885. Okay, this is where we closed at. Remember, the S&P is not trading right now. The E-minis are trading. So this is a static chart as to how we closed that on Friday. So there's a gap fill here. You can see that gap fill is from, and these are very critical for technical traders. You gotta look at these, every single facet of these charts, and you'll know pretty much what the markets will basically offer as an opportunity, as it has done hundreds of times, to and create a sharp reflex bounce, which we can take advantage of, take some profits, move out. It's the nature of the beast. And this gap here is 2905 to 2895. So the key is, that is the gap, in my opinion, that is getting filled as we speak, because we closed at 29. We closed at 29.32. So let's do the math here. 29.32 minus the first gap right there is 29.03. So that's so that brings us to 29. I'm sorry, it is 29.004, 29.32. So right there, from where we closed at to this gap is 28 points. 28 points. So the market being down 15 points, we are not even close to that gap yet. So we do have a little bit more room to fall. Okay? Just letting you all know. I hope you both understood what I just explained, Jody, Mike. From here to the upper end of this gap fill, which was from the 18th of June, that's 28 points on the S&P 500. Futures are down roughly 15 right now. So we still have a little bit more room to fall to close this gap. These gaps are substantial gaps because this was a substantial rally. So obviously this gap will act as a major support. So we know what a major support level is on the S&P 500 as we enter tomorrow morning's trading and this week's trading. That will be 29.04 and 28.94. Which also happens to be close to kissing this major uptrend line, which if broken, the markets will plummet very quickly. So it'll be a beautiful shorting opportunity. Around here, the markets will defend itself. We will still have a minor shorting opportunity if the gap doesn't get filled right away at the market open. We will still have a minor shorting opportunity using SPY puts, but just letting you know that this uptrend channel, if broken, uptrend line, I should say, broken at around 28.85 will trigger a sharp fall into the 2800 level. That's another 600 points or so on the Dow, which is possible. All right, just letting you know. Now, nothing happens in a straight line. Even when we short things, you all know, it doesn't give us the rewards right away. We have to be patient. There's a lot of zigzags on the intraday. We buy a SPY put, it stays stagnant. The machines manipulate those prices. I have no doubt about it. I'm a professional active trader, real trader. I know. It just kind of sits there and you're wondering why the VIX calls are not shooting higher. And then all of a sudden, they just let it go. And I'm sure you guys have experienced the same thing. It's very frustrating, but that's just the nature of the business. In the case of the SPY puts or calls, let's say SPY puts in that matter, they kind of do the same thing too. They kind of hold it. If it's at $1.50, markets are still falling. It's still stuck at like $1.55, $1.60. It should be at 2, and it does go to 2 or 2.5, but that's only when the big sell-off comes within an hour, let's say between 1 and 2 o'clock or something like that. That's what happened on Friday. So it happens all the time because they don't, shorting is not necessarily something that is as easy as people think. Okay, now futures are down 20 right now, so we are in total gap fill mode. And let's take a look at the actual live charts on the S&P E-minis. So this is what it looks like. We are at that support that I had drawn. We are going to break that support, and we are going to test this uptrend line here, this one. Let me put it in blue so it resembles the S&P uptrend line. And that comes into play at 2,900. So I have, from what it looks like right now, looking at the candle structure and the ferocity of the selling, futures are down 22.5. There's wide scale dumpage going on in the Globex markets. We are going to hit this level while, in my opinion, while we're doing this session. We might even slip a little bit below that. We shall see. Now, let's take a look to see how dramatically oversold we're going to get. And that is something critical. We are getting dramatically oversold. Period. There has not been one single instance, other than if we're going into a full-fledged bear market, which we are not. Okay, not at this stage. That There has not been one single instance on a tactical basis where the full stochastics have entered into this deep dark zone below 20. This is a relative strength index. The RSI is the same way, 20 and 80. Below 20 right now, it's printing 8.32, but you just have to look at the overall levels just by your visual observation. There has not been one single instance that we had not had a major reflex bounce or a minor reflex bounce. In this case, it was a minor reflex bounce before the markets gave in again. That was back in October. This was where we came to on the Christmas Eve massacre. And this is reading the tea leaves underneath the price action. That's really what we do. Futures right now are collapsing. We're down 25. So as we speak, we are going to touch this blue line. So this is stuff coming in from the Asian markets right now. China, I did the session at 9 because the Chinese markets just opened. We would have a much better read of how to measure these technical movements and what to expect. If I had done the session at 8 p.m., futures were actually just down 3, and right before I started the webinar, futures were kind of flat. So this is a much better time during these periods, highly volatile periods. Let the Chinese markets open, let Shanghai open, and those major markets, and then we have a better idea to read the technical tea leaves. I hope that both of you understand what I'm saying, and I'm glad that you guys are here. So doing it at 8 p.m., the standard time that we do the webinars, wouldn't have served any purpose because the futures were not giving us the real read. They were kind of flattish. And now it's giving us the real read. The 21 down, 24 down. We're down about 21 right now. So we're trying to hold the support, this red line here at 29.09. We are bouncing off that slightly. I don't care what it looks like. It's going to kiss this 28. It's going to kiss this blue line. We want that to happen. From a technical standpoint, we want to see really ugly futures which turn into a powerful tactical reflex bounce opportunity by the time we start trading at 9:30 a.m. So even if the market opens down, which it probably will, at 9:30 a.m., we should be able to find a reasonable tactical bottom based on technical indicators and deep extreme oversold conditions. And I think we'll have a great opportunity, just like many times before, to take advantage of it. So going back to the stochastics, when it enters into this zone, it is a bottoming process, which I mentioned a few times on Friday. Bottoming process can take anywhere from 6 hours to 24 hours to 48 hours because the machines now, and have been for years, they don't wait around. What would have taken weeks now happen in hours. What would have taken days now happens in minutes. So just get used to it. In fact, it's great because the faster and furious the sell-offs are, and there will be equal and opposite reaction on a short-term basis before the next big sell program comes in on a reflex bounce, and that's what we have to take advantage of. So it's always been the case. Same old story. So at this point, we are in that deep extreme oversold zone, and we shall see how much pressure there is on that side. We are also, so this dynamic full stochastic, as we are seeing on the daily, is showing you that as I'm doing this webinar tonight. Now let's take a look at the MACD. The MACD is also getting dramatically oversold with now that it's crossed, now that it's curved down. Now what we don't know yet on the MACD is whether or not it is going to basically take a complete cliff dive down into that minus 30 range or so, just like that, in which case it would be a very solid buying opportunity, or whether it's going to basically come down a little bit and bounce. So I don't know that yet. All right. What I can see from the stows and this, we are getting dramatically oversold very quickly. To me, that's an opportunity to take advantage of. Period. So we shall see. So you can also see that there is a lot of selling pressure coming in from overseas markets, and that's why these histograms are expanding. So let's draw a line to see how far the histograms can expand, because that's what the basis and the secret of tactical predictive analytics is all about, that I've proven to you guys over and over again. I'm not in the business of emotional panic. I'm in the business of opportunistic tactical trades to make money. That's just the way it is. And I know many of you have come across to thinking like that. It takes time. For some people, it's hard to keep their emotions away when they see, P&L upside down. And remember, what happened on Thursday with the tweet was dramatic. There's no question about it. There's no question about it. I mean, that was just like somebody just dropped a JDAM on your house and you didn't even know what the hell happened. So as long as you're down in the bunkers and in a safe place in the basement, you can still come out and take advantage of what happens, right? So that's the bottom line is that this level here, which is if we put a number on it, that number would be 15.75. So you can see that. And generally what we have seen, the last time we had a sell-off like that, the market did do a 3-day bounce before it resumed its selling, which I think is probably going to be the same story this time. We'll have a sharp reflex bounce, and then that'll get hit. All right, that's my opinion, because of the curvature of this MACD that I'm seeing. Because the best point to buy the MACD is down here. So initial is that you get that quick reflex bounce because we are now hitting that support level. You want to sell into that whatever 1-2 day rally that we might have, in my opinion. The uptrend line and the overall 34-day and the 50-day, which are the two major highways that the market travels on, are still crossover up and still pointing up. You can see that very clearly. So it's not like all of a sudden everything just went to hell in a handbasket. It's just happening very quickly on this short-term correction, which I had mentioned about a week, 10 days ago, that the further you move away, as you know, from the 50 and the 34-day moving average, you will certainly get a mean reversion. This is the mean reversion, where you revert back to the mean and you slip and slide because stops get triggered. You can't stay that elevated for too long without getting a quick, sharp correction. So this is, I've proven this over and over and over again, and I'm sure many of you finally getting it. So saying all that, this is where we are. Now, the last time I noticed one thing here, and this is called, pattern identification, if you want to look at it that way. The last time we got this type of rampant selling, 1, 2, 3, 4, 5, and this small volume is right now after, on the GlobeX markets with futures down 22, this little red line here was here. 1, 2, 3, 4 days, 1, 2, 3, 4 days, and on the 5th day, 1, 2, 3, 4, and on the 5th day we got a, I hope you guys can see it. Let me try to make this, try to enhance it. Okay, now you should be able to see it. So I looked at the last time we had these dramatic selling. I'm taking this out of the picture because this was a totally different story that happened back. This doesn't correlate with what's happening now. This is still a bull flag, believe it or not. This correlates with what happened in the months of April to June, where it wasn't a downtrend, but we got quite a few powerful reflex 50, 100, 200 point type of updates. You can see that. So this reminds me of this, not this. This is not developed yet. Can it develop? It sure can, but I'm just looking at the most recent comparable. So we got 1 day, 2 day, 3 days, 4 days. We have 1 day, 2 day, 3 days, 4 days, and this is the 5th day before the market opens. This is where we are. Okay. So what happened on the 5th day? I'm not counting this as the 5th day because now it's a GlobeX market, if you understand that. So on the 5th day, there was a big sharp bounce, and that was this candle. it was a selling opportunity, because all the market did was create a inverse hammer, a hammer reversal right there, which hit the 34-day moving average, but that was the end of the story. So even though it looked bullish, it found massive resistance, which is going to happen exactly this time round. Massive resistance at the 34-day moving average, and it shot through the 50-day moving average, hit the 34, and that's the end of the story. And then there was a big sell-off. That was a panic capitulation. You can see that in volume right here. These volumes are panic capitulations. They are generally tradable opportunities that happen within 24 to 48 hours. You get a sizable bounce. Okay? So just every single time. There has not been one single time where the E-mini volumes, which cannot be hidden in private exchanges, right? In dark pools. These are visible to all of us. So bottom line is, all these E-mini futures, this massive volume, you're talking about 2.5 million, 3 million contracts going off, generally create a sizable tradable bottom. So be ready for that. And I've already shown you on the structures where we may go. So this uptrend line for now should hold, which is basically 2890 to 2900 on the E-minis. And I showed you what it is on the S&P 500, 2885 to 2900. You guys both with me so far?
Yes, Frank.
Okay, sounds good. All right, Mike. So bottom line is capitulation volume. Always remember that. Same thing with stocks. Same thing with the markets. So how is this looking? Well, to me, it's looking juicy, because I want this to be really, really ugly, and I know all of you guys want that too, because this gives us some real cheap bargain basement opportunities on many stocks. This pattern that you're seeing here, in my opinion, this is what's going to happen. Okay, in the following week, following week to the end of August. Now, anything can change. There could be a great tweet out of President Trump saying, hey, you know what? The Chinese are actually talking sense now. You know what the markets are going to do? They're going to be up freaking 600 points. So we are dealing in a completely different universe right now, okay? President Trump single-handedly can move the market 600 to 800 points. I particularly don't like it, because that's too much market control. But what to do? We have to live with it. So, you know what I'm saying? And I don't think the fund managers like it. I don't think anybody likes it, because the reality is that it really screws people up big time. Mom and pop get hurt. Their pension funds get to take a nosedive. They never bought stock. They haven't bought a stock in years, and now they're never not going to touch stocks. But they automatically, they're putting it into their 401ks and stuff, so that's still there. So anyway, so bottom line is that this is, in my opinion, what is going on at this point. All right. And you can see that futures right now down about 21. So let's take the front end view of that. I explained to you about volume capitulation, explained to you about STOs, explained to you about the MACDs, covered all my bases. And now we look on the front end. So on the front end, this is where we are. Now let's take a look at the weekly. Weekly is also live, right? Because it's happening. So on the weekly chart, we had one heck of a spike. Look at that. That was last week. That matched these weekly charts. Now on the weekly chart, things are telling me that after the initial reflex bounce, the market technically should sell off again. Why? Because it's pretty simple. We're not even close to this very powerful weekly crossover of the 34 and the 50. So again, in simplistic terms, let's keep it simple. The 50 and the 34-day moving averages have been slightly moving higher. In fact, there's a crossover here overall, despite massive volatility in the market. Massive, right? Going all the way back to last October, December's crash, even going all the way back to the January 18th, 2,000 point sell-off, the moving averages still have not buckled. And we have a crossover. And I explained to you in the last webinar, you can see that on your screens too, that crossover occurred on the 22nd of July, right? Right there. And it's still there. However, the standard deviation, overvaluation, or excess move that the markets generated away from away from the highways was quite large. So now it's coming back to touch that. So on that note, it is possible that we actually drop another 100 points, and it's going to happen rather quickly. 100 S&P points, that means another 600 to 700 points on the market. Who knows? Might happen this week, for all I know. But this is most probably will happen in the month of August. In my opinion, it'll happen towards the middle of August, where we normally get the brunt of the selling, as we have seen repeatedly, which is roughly the 15th, give or take a few days. Because we still have to come close, and it's called mean reversion, reverting back to the mean, and the mean being the 34 and the 50-day moving average. Let's take a look at the internals. And stop me if you have any questions. Mike, Jody, this is obviously not good. We are basically now, the percentage K is actually moving higher, which is actually a good sign. But I think that, I always mix it up. I think the orange line is the percentage D. The percentage K is the white line. So this one now has created a head and shoulder, right? It's a head and shoulder with a, I don't really see a neckline, but let's call this a neckline. So the bottom line is that either we are going to stop here and turn, or we're going to fall below, which means we're going to drop towards the 2,800 level or something like that on the E-minis and the S&P 500. This hostility between China and the US trade stuff escalates. We will get there very, very quickly. Okay? So the weekly, at this point, is on a retracement pullback mode. So that's pretty much the long and short of the picture. Let's take a look at the monthly, if you really want to like project out. And the monthly doesn't give two hoots. It's moving nicely higher. It's one little blip here. We can come down a little bit lower. Doesn't matter, because look at the internals. This is the internals is what really dictates the market. But this is a monthly. That means we won't see. We'll have to go through some real gyrations. And the monthly stochastics are just nice. It's really nice. It's still heading higher, starting to get overbought, but heading higher. The percentage D or K line, I forget, is not into overbought levels yet. So the monthly is not showing any major technical damage. When the monthly starts to show technical damage, as it did in May, and then turned viciously in the month of June, these are the type of blocks that can signal a intermediate term bear market, where you tend to remain short, more on the short side than the long side. But I don't see anything like that happening yet. Okay. So, and all these moving averages, the 5-month moving average, the 20-month moving average, because they changed the time scale to month, right? So it's not 5-day anymore. It's 5-month, 20-month, 34-month, 50-month moving average. They're all moving along. Internals are fine. So that's the bigger picture. Let's take a look at this chart that I've drawn. This is basically for us active traders who do both swing and day trades. And this is where we are. So I've drawn these lines. based on the fact that this was a major inflection level after the market went ballistic up back on the 18th of June. Massive moves, 2 days in a row. So I saw visually, I think you guys might agree with me, that we can either draw, or we can draw one more line actually. This line should suffice. So this was a massive inverse head and shoulder breakout. Look at that. Let me change the color. Right there, right? Bang. So that neckline breakout becomes support. We want to put it down a little bit more. Yeah, sure, we can put it down to 2870, which was basically, we can certainly do that if we want to look at an extreme scenario. We can, because there was another massive move prior to that, the beginning of June. So if we do this, trading is tactical warfare. So you need to have your reconnaissance maps. You need to know, what type of enemy that you're fighting. You need to know what grounds you're fighting on. So that's what these charts do. So regardless of what happens, you can basically adapt to that situation. Yes, you'll take hits, no question about it, but then you can make back a crap load of money or short a little bit more and stuff like that. So these are the tactical warfare maps that you need when you enter a zone which is a foreign zone. It's like our boys in Iraq or in Afghanistan, right? The reconnaissance guys, they laid out the maps. They didn't look at Google maps and say, "Oh, this is where the bad guys are hiding." No, they went in there. They did, put up the drones, all kinds of aerial photography, all kinds of stuff like snooping in and out, some informants, all that stuff, and they mapped out the lay of the land, and then they went in really hard. So it's the same thing with trading. All right, no difference. So this is the tactical charts that you need in order to win this battle. And you got to keep a calm head. Got to be very calm. So you don't need to panic like the idiots on all the financial news networks. I mean, all of them, okay? Or some analyst who comes in and say, "Oh, this is it. The U.S. is going to go to hell in a handbasket." You know my thoughts on that, all this garbage talk. This is a tactical move down. And there are things to worry about. This China thing has to be somewhat the heat has to come down a little bit, no question about it. So anyway, so if we look at it, we can see 2868 on a complete meltdown, and this is where we are right now, which is a neckline support, which is neckline breakout. Now it's a neckline support. And notice, as I was showing you all this tonight, we went below that, and then the buyers came in at around 2905. Do you guys see that? Right there? There's a little tail, and now we are above this. That's just the nature of the beast. Okay? That's just the way algos work, and these Globex traders are using similar charts to trade off. They're probably using, they're probably sneaking in and stealing my charts because these are picture perfect on what is going on. So this is the zone, which would be a nice shorting zone. These are the levels that I had drawn and shown to you guys. And like I told everyone before, you want to be a serious trader, you want to protect your profits, you want to minimize your losses, you got to screenshot these charts. It takes 1 second to do, 2 seconds. I'm always screenshotting and putting it over there for all your for all you guys and girls, right? So you guys can do it and put it in a folder. So this way you can review it and say, okay, I see, I see that. Other than that, you just scroll through the Twitter feed. But isn't it nice to have a screenshot so that you can match it to what you're looking at on your screen? Makes a lot of sense. So that's where we are. Now let's take a look at this Fibonacci thing. It looked we had a very powerful reversal. This is the Fibonacci retracement level. We hit the 23.6 level, shot up over it, tried to get towards the 38.2 fib level. Didn't quite get there. This is the sell-off right now. Now, these also have downtrend lines that I had drawn going all the way back to last week. Right there, there's your downtrend line. And guess where we are right now as we speak with futures down 22, right there. We have a few E-mini traders, Globex futures traders in our midst as members, and I'm sure they're benefiting tremendously from using these charts if they're trading right now. So this is where we are. So this level here, 2,900, 2,895, should act as support. And when that reversal comes, just like you saw on Friday, you can take advantage of 30, 40% type of moves on the SPY calls and such, which I kept a few of them for August 7th, which was Wednesday, for the Wednesday ones that I told you guys to buy. The SPY calls were as low, the 295 calls that I asked people to buy, the August 7th ones, for example, were as low as $1.29. They went as high as $1.43 at the close. They went as high as $1.60 to 70. Those are nice 30, 40% type of moves that that you can make. And that was all because of this double bottom falling wedge type of situation. So let's see how this resolves. Okay, futures are down 24 right now. If you want to zoom out a little bit and look at, we covered this one, and let's say we look at this is very extreme oversold. See, we lost the 50 on the daily futures, and we are, and this is something I do want to explain to all of you guys, which I on an ACS this morning I was explaining it to two other people, two other members. When you fall out like this, well below the Bollinger, it's called the Bollinger overshoot. If you go Bollinger overshoot well above, this is not well above, but still on the upside, you are going to pull back into the Bollinger. The Bollinger is the magnet. It's the magnetic cloud, right? So now we are way out of the Bollinger. There is a 90% probability within a 24-hour period that you are going to get back into the Bollinger, which means you're going to get back over the 50-day moving average. Once you lose the 50-day moving average, there is always an attempt to at least try to recapture it back. If it fails, it fails. You go short. But there is always an attempt. Every single time the market has fallen out of the Bollinger Bands, the Bollinger overshoot on the lower end, it has bounced up. It has bounced up. There has not been one single instance that I've seen in any one of my platforms, in any one of my charts, where you had a Bollinger overshoot on the downside or the upside. We're talking about the downside here, that it has not gotten back into the Bollinger Band. Right there is 200, 300, 400 points on the market. You guys with me so far?
That's Frank.
Okay. So Bollinger overshoots, look at it as an opportunity to play that bounce, which could be anywhere from 100 to 300 points above, and it'll overshoot over the 50-day moving average, and this slightly crossover down of the 34-day moving averages I explained earlier will at this point act as major resistance. And where is that number? That number is around 29.65. We are where we right now, 29.35. That's 30 handles, roughly about 200 to 220 Dow points on this move up. So you have to, if you have SPY calls, got to cost average now. It's just the way it works. I've shown it to you hundreds of times. Bollinger overshoots, back into the Bollinger, gets rejected at the 34-day moving average, and then you short. And then possibly, who knows? Like I explained to you, I mean, not a who knows, I've explained to you in technical terms where we can go. Where we can go. 28.86, 28.76. Can we go all the way down here? Well, if like they say, the diapers hit the roof, okay, then yeah, sure you can. But I'm not projecting that far. Can we get here? Yeah, we can. I mean, that would be a very dramatic sell-off. Might happen by the middle of August. We shall see. We shall see. And then it'll be a monumental buying opportunity again. So that's it. Now, we have a lot of earnings. I just want to cover one stock, which we have traded before, that comes out on Wednesday. That's ROKU. So let's take a look at ROKU. Look, earnings, individual selective earnings don't give a hoot about what this is happening and that is happening. Yes, we'd like the market conditions to be favorable, but in general, we have seen so many stocks. Some of them I missed. I want to slap myself. Kellogg was up 9%. I mean, it was on my list. And then there was some of these other stocks which came out with earnings, which were just going through the roof. I'm like, oh Lord. So let's take a look at ROKU, and we're going to look at that on the think or swim thing. So like I said, individual earnings plays will do their own thing. ROKU has no exposure to China, so that's a good thing. And I'm going to start off by looking at the bigger picture, then we're going to zoom into the short-term picture. Fair enough? Okay. So if you look at the bigger picture on ROKU, this is a monthly chart. It's a damn good-looking chart. I mean, what more could you ask for? This was last week. The stock sold off from 106 to 98.99. This is a bull flag. Look at the volume. There was no frigging volume whatsoever on the monthly chart. 12.4%. Look at this. Don't worry about the numbers. Just look at the visual. Okay, but then the month just started, so obviously that's not really a good comparable. But looking at this here, this is still a good looking. I mean, we had a massive inverted hammer on ROKU from 108 in the month of June all the way down to 90. That's 18 points. And still the stock exploded the next month in the month of July. I mean, that's a bad technical signal, right? That's like a real inverted hammer falling right on your head. Stock didn't care. It hit that uptrend line, slipped a little bit lower towards 87, 1 or 2 points. That's nothing for these stocks. And then it just took off, 113. So this is still on the monthly picture, still a damn good looking picture, right? Right there. Don't have to be rocket scientists overanalyzing this stuff. Where's the support? The major support comes into play at around 87. If it breaks 87, the stock will hit 77, which was the massive ascending triangle breakout, which occurred in the month of May, right? You can see that. There you go. So this is a major support level, 77.56, call it 77. Now, earnings are earnings. Anything can happen. But like they say, as an options trader, if you're not in it, you'll never know. So you gotta bet something. It's just the way it is, Gotta be the way it is. And I don't force anyone to do anything. You do whatever you want. But I'm just saying, it could be huge. So looking at the daily, this is what the daily looks like. Nothing wrong with it. The daily is retesting the 50-day moving average. Could slip as low as 95. That's your uptrend channel right there. Let me make this line thicker. Make it blue maybe, so it stands out a little bit more. Right there. That's your major uptrend line, 95.27. Can it get there right before Wednesday? Who knows? Maybe. Fine. Make it happen. We'll get cheaper prices. What's happening internally? Getting really oversold. Might get a little bit more oversold. If the market's open right now, tomorrow morning, like futures down 22, ROKU will be down to 90. Yeah, it will be somewhere between 95 and 98. Easy. Use that to your advantage. There is another dotted channel here that I had drawn, and that measures down to 88 if it breaks below this blue line. Getting pretty oversold. If the earnings are good, it's going to be a massive coil spring action. The stock will take out 113 because this stock is pretty heavily shorted too, right? The lovers and haters. Either they hate Roku or they love Roku. Just like there's no middle ground. The thing will just zoom up and hit 114, and yeah, it'll be up anywhere from $12 to $15. If it breaks down, then we have 90, and we have worst case scenario 77 to 80. So you might want to do a straddle on this one. Let's take a look at the 1 hour chart. It's fine. This is the Trump tweet. No, Trump tweet. This was the Trump tweet. This was the Fed Wednesday. And this is basically, lots of gyrations for a good anywhere from 3 to 4 points. This is for active traders who want to trade it during the day, stuff like that. But I'm focusing on the daily. I'm focusing on the weekly. Oh, this is the weekly. The weekly looks damn good to me. No damage whatsoever on this. Very powerful. Bars are still green, shrinking a little bit, but green. This is still moving up nice. Stochastics are moving up nice. I don't see any major breakdown there. 1 week of a red sell, which is fine. The last time we had a high volume sell-off week was the week of June 24th. Stock pulled back. It just went nuts, right? This is where we are right now. Nothing in this picture, technically speaking, from a pattern symmetry standpoint, reading candles and stuff, is telling me that Roku is about to crash and burn. Saying all that, stock could very easily be down to those levels that I showed you guys. On the upper end, it can hit the highs, 113, the channel highs, 116, and God help me if the stock goes to 130. I doubt it in one day. Up $30, I don't know. Hey, it can happen. But the uptrend lines are very, very much intact. So Roku's one of them. The other one that I want, we have made some very decent money on TTD, Trade Desk. Many of you might have missed it. Some of you didn't, I know. It's a killer stock. This is the one that powers the programmatic online ads for Google, and now they're working with Amazon, right? So they're coming up with earnings on Thursday. Definitely try to do this one. Stock has pulled back from, this is the weekly chart. I'm going to take these lines out so you guys can see the candles a little bit clearer. This is a very powerful company, richly valued, no question about it, but no one does what they do. I mean, there are companies that do what they do, but not as good as they do it. This is one heck of a fat candle bull flag that I've seen. These things can change the makeup of small portfolios, small trading accounts, and make them big trading accounts. But you have to do it. If you don't do it, then how the heck is it going to happen? So it's up to you. I like it a lot. 250 is the lower end, upwardly rising, 5-week moving average, the yellow line. Worst case scenario, 223, and heavy volatility after hours. You know how these stocks are, right? Algos will smash it down and then boom, run it up, all kinds of stuff. Or it just makes a beeline and it hits the highs again, 281. 20 points is nothing for TTD, right? The weekly channel shows the upper end of the channel is $333. That's 50 points higher. I'm sorry, 70 points higher than where it is. Will it up 70 points right after earnings? Absolutely not. I mean, let's not be ridiculous. The most it's going to move is 10%, maybe 15%. We have had stocks that move 15%, big stocks after earnings. So let's do a math here. 261, where it closed at, and let's say it moves 12%. It brings it up to 292. Brings it up to 292. So let's see here. There. You're telling me the stock can't get up here? That's a 12% move, by the way, on the stock. This is a very well regarded and highly respected company with major brand name customers, Google, Amazon. Come on. It's not like it, one trick pony sitting there doing nothing. So this move here is a 12% move, which is roughly 292. If it goes to 292, you don't think it's going to go to 300? So that's it. So guys, thank you for attending. Covered a whole bunch of stuff. It's going to be a busy week. Don't be scared. You have the right to feel crappy for no fault of your own because of this sudden volatility, which are completely out of our control. But let's use grit. Let's use brains. Let's use quantifiable risk. Let's look at the charts and let's see what happens. I'm always there to help you all day long. Do what you need to do. Have a great evening. God bless you all. And let's all say a prayer tonight before we go to bed for all the victims of all these shootings. Absolutely terrible. It just breaks my heart. 2 of them back to back. Horrible. Some of these people are completely deranged. I hope God helps their souls. So let's say a prayer for all the victims of these absolutely crazy shootings over the weekend. Good night.